Alright guys, welcome back to another banger video. This is going to be a video going over risk management and how I manage every single one of my trades, right? Going over my stop losses, where I put my take profits, how I, risk according to the exact trade I'm taking, etc., right? Because risk management is probably if not the most important factor in staying in the trading game the longest, and how you're able to catch very big winners with keeping your losses very minimal, right? Besides like the psychology behind trading, risk management is probably just as important. So I'm gonna make a quick video going over how I do that, because I have not yet, right? You've seen a lot of these trade recaps, but I haven't really gone over the exact reasoning on how, or the exact way I manage my trades, right? So quickly, I'm gonna go through a few examples, right? A few real life examples of the two trades, kind of the most recent ones I've taken, and how I was able to catch a very big winner with keeping my losses very small. And then similar to the other trade I took, where it was actually not a loser at all, it was just a straight winner, but how I was able to move my stop losses up and what I was doing, and kind of just going through the few days I was holding this trade for. So the example I'm gonna do first is just kind of the wording behind it, right? So I'm gonna just go through like an example of what I do, just based off like some guess definitions or whatever. But first thing you want to do, the first thing I do, right? Everyone manages their trades differently. There's no right or wrong. It's just kind of how I feel like is the best, the best for me, how I keep my losses very small, because that's kind of the most important thing to me, right? It's just making sure when I lose a trade, it's not a big loss, right? I'm not losing a X amount of money that I'm like, man, like, getting into my head with emotions and all that stuff. Because you gotta, the most important thing is just keeping your head, keeping your head and your brain just kind of straight, and you're not like going in a spiral, because you lost too big and you want to make up for the losses. And not that, I do that. I mean, there's still, I'm not perfect, right? I'm a human. So there are times, you want a revenge trade, and I have the urge to do it. A lot of times I got to fight myself off, but this is just how I do it, right? This is kind of what's been helping me, especially transitioning from it used to be a day trader to a swing trader. So this is a lot easier to manage risk, in my opinion, than day trading. So let me go through my swing trading kind of risk management, right? So first thing is first, the exact first thing I do before entering any type of trade is I identify my stop loss and my take profits, right? So I'm literally marking off with physical lines, right, or zones, right, whatever you want to do, the exact area of my stop loss and the exact areas of my take profits, right? So typically I'm putting around 2 or 3 take profit points, and I have 1 stop loss, right? Obviously. So that's the first thing I do. The second thing I do is, depending on how big my risk is, right, where my risk reward is. So if my entry's at a X amount of dollars and the stop loss is pretty close to that entry, or it's very, very large, very big down to the downside, depending on what, whatever that is, I'm risking appropriately. So if my stop loss is very, very close to my entry, I'm risking a heavier size than normal, right? If my stop loss is very far from entry, then I'll risk less, right? And obviously, right, a full size position, there's a half size position, and there's a riskier, like, quarter of a position, right, that you can enter, right? I don't always enter with the same amount of dollars every single time, right? It really just depends, right? You gotta have to have that going into the trade before even taking it, so that way and you're not, taking something with heavy size and then you realize later, like, oh shoot, like that was too big of a stop loss to do that, right? So that's the first thing I do before even entering the trade. And then obviously I'm gonna go through this like kind of like an example scenario. So let's say, right, I buy 10 contracts at around $2, right? So this is just a normal example. Like this would be like a normal size position, right? So $2,000 is what you're risking. So I'll just put that on there real quick. So equals 2,000, right? So this equals $2,000 as a risk, right? There's 2 scenarios that can happen, right? As soon as you enter a trade, right? Your stop loss either hits or your take profits hit. There's no in between, right? So the first scenario, let's just say your stop loss hits, right? So let's say I take this trade, it comes down to my stop loss and it stops me out, right? Or it just hits my stop loss. I haven't stopped out yet, right? The scenario, what happens after my price hits my stop loss, I'm selling the full position. No ifs, ands, or buts. There's no averaging down, right? That's the worst thing you do is average down and, add more into the position for a cheaper price in the option. That's like the worst thing you can do, right? Because people tend to do that thinking they're like, their trade will end up going back up. They're just going to risk a little bit more, get a cheaper average in their option, and then just lose a lot more, right? Because it just continues to go down, right? There'll be times maybe it does end up going back up, but a lot of times it's kind of just building bad habits, and you're pretty much risking more than what you're already willing to lose, right? So that is probably the worst thing you can do, right? People forget that you can always re-enter a trade. So there's no reason like where you take a trade and then it's like, oh wait, this is the last time I can ever take this trade. Like, no, you can always re-enter it if you stop out, right? So that's the first thing I do. I sell my full position. You can make an argument saying you want to, hit your stop loss and you want to just de-risk and just leave a little bit of the position in, right? So you can say, right, if I have 10 contracts, I'll sell 8 of them and just leave 2 contracts. But no, that's not what I do. You can make an argument for it, but I don't do that, right? So that's what I'll do if my stop loss hits, right? So the second scenario, right? Let's say I take the trade and it ends up hitting my first take profit, right? So what I do after it hits my first take profit, right? Typically, I want to target for at least a 20-30% return before trimming any type of my position. Sometimes I will trim before that, right? There'll be times where I'm trimming, or if my stop loss hits and it's only around like 15%. Sometimes I will end up just selling it for 15% and then moving my stop losses up. Sometimes I'll just leave my stop loss as is, but majority of the time, right, when I'm taking a position off at my take profit 1, I'm always moving, right, my stop loss up to break even, right? That way, that trade now goes to a risk-free trade. There's no absolute way you can lose this trade. There's just it's impossible, right? But yeah, that's why I am taking, position off, selling half, right? So I forgot to say that I sell half my position, right? So if I had 10 contracts, I sell 5 at around 20-30%, and I'm leaving my stop loss at break even. And I'm literally physically going on my phone and placing an order on the brokerage for whatever I bought the contract at for. So for this example would be, I'll put on there to sell the last 5 contracts for 2.00. So that way I'm no longer losing this trade, no matter what, right? Obviously there's scenarios where the stock, if you swung it and it gaps down and it just goes below your break even at the open, that's scenarios, right? But those rarely happen. So it actually just happened today, but that's a different story. But that's what happens, right? You want to put your stop losses at break even, risk-free trade, and we'll basically go from there, right? So after that happens, take profit 2 hits. Let's say that's the next scenario, right? Take profit 1 hits. Now take profit 2 hits, right? After that, right, I sell a few more, right? I'm not always, there's times where I'll just sell a full position at take profit 2. But let's say for this example, you want to just sell a few more, right? This thing can still continue to go up. So I'll sell a few more. So if I only had 5 left, since I already sold half at take profit 1, I'll sell 2 more. And then I move my stop loss either up, right? I personally move it up, but you can even just leave it at stop loss, right? Or your stop loss at break even. It's still a risk-free trade, so that doesn't really matter. It's just that's really just up to you, right? For me, I do move my stop losses up. So at this point, I would say like, oh, I'll move my stop loss at 15% gain. So if it goes up to take profit 2 and it's like 70%, if it comes back down to 15%, it'll immediately sell it for me. And yeah, that's what I do, right? And I just keep moving it up and up and up as the stock, the option just goes up, right? And that's what I do, right? And I'll show you the 2 examples. Actually, there's the 2 good examples that I took from XOM and BIS, where it's 2 different types of trades, right? And I'll show you right now, right? So XOM, I'll go through this one first. This was the really good trade that I took a couple weeks ago, or actually a week ago on Monday, or last Monday. And I took this for a swing, right? So I'm gonna go through where I had my stop losses at, where I had my take profits at, and how I managed this risk on the way up throughout the days I held it, right? So first thing is when I entered it, right? So I entered it on Monday on this candle here, right? And And this was actually a risky entry, right? I put this in here. So this would be considered a 1/4 size of a position, right? This wasn't a half size. This wasn't a full size. So going into it, I already knew before I took this trade, this was a half or a 1/4 size position, right? So I'll go through and I'm gonna look at when I took this. So I've already gone through this trade on a recap, but right here, right? Risky light size, right? So 1/4 size, the 123, 126 calls. So into those, right? So I already knew ahead of time what I am risking. So that's the first thing you want to do is obviously step 1, right? And then step 2 is knowing where your stop loss goes. So my stop loss was going to the low of day. So I put my stop loss at low of day, which is, this is the daily chart. So you obviously can break it down to the smaller time frames, but I'll just do the daily time frame real quick. So I put my stop loss there and I'm gonna take this off real quick. Oops. Boom. So that was my stop loss, right? Down at the low of day. So if it would have broken down at that spot, that would stop me out. My first take profit, right, was the high of this kind of this flag here, which was also the all-time high spot. So that was a big key level I wanted to take profits at if it ever got to that point. And so you can clearly see it did the next day. And then obviously I had my second and third take profits already intact. So I put my stop or my take profit to not at 130. This was just another key level. Hold on. So this stock moves an ADR of 1.84%. So this is all-time highs after 125. So there's no previous price action you can see where there's resistance or anything like that. So what I do, right, is dependent on the stock, right? Usually I'll just do every like $5 or every $10, depending on how, you know, the size or the price of the price of the stock. But in this case, right, this ADR or this stock moves around 1.84%. So what I did was, all I did was move it 1.85% from that spot. So like right around here. So 128 was my second take profit, and then 130 was my third take profit was 130, right? That's a big key level, 130 psychological level, right? So those are my 2 take profits at that point. And I didn't have that many contracts, so there's no reason to have more take profits because I probably would have just ended up selling it if it ever got to 130, which it did. So yeah, those are my take profits and my stop loss. So, and you can see the next day, and I'll drop down to the 15. So bang, right? So took it here, right, on Monday, ends up gapping up, hitting my first take profit. And that's where I sold my position for half, right? Trimming half, 35%, trimming half, right? Trimmed half, stop set to break even, risk-free trade now. So that's a perfect example of what I just said on that kind of that breakdown, right? I took my half my position off at the first take profit, which was 125, and then I put my stop losses at break even. So now I'm just basically closing my phone out. What you could do is literally just close your phone out, go to sleep. Like it literally doesn't matter because I'm setting the actual sell on the phone on the brokerage, right? So it's not like I'm looking at it and watching it. I could literally just put it on my phone, stop loss at break even. That way there's no confusion, there's no ifs, ands, or buts. If it ever gets down to it, it just sells it automatically, right? Does it sometimes hurt me? Yes, but in the long run, I know it keeps me from ever losing a trade that shouldn't be a loss, right? So that's what happened, right? Trim there. I trimmed more at that 128 spot, so you can see the previous day or the next day it went to 100%. At one point, I think that was that first take or that second take profit, 100%. Sorry, actually that was the 200%. So I trimmed more after this point, right? I think later in the day for 100%, and then this went to 205%. So here I'll show you exactly. So 205% and holding. And I moved the rest of my stop loss. So I didn't move it, or I didn't keep it at break even. I moved it up to 100% in profit, right? That's like I was saying, I move it up in profits. So 100%, 260, right? It went to 260. I moved my stop loss again, right, to 200%, and then so on and so forth. And I ended up selling my last one at 400%, right? This would probably have ended up breaking me out at like 300% since when I moved my stop loss at 400, or if I took profit at 400%. The rest would go up to 300%, so it probably would have stopped me out the next following day down here. But regardless, right, I end up moving my stop losses up and trimming along the way up, right? That's just how I manage that trade. The second one, right, we'll go through NBIS. This is the most recent trade, and this is one that actually basically stopped or took profits on and then stopped me out the next following day. That didn't go to my second take profit, right? So I entered this on Friday, right? There's a different way I trade on Friday, right? When I'm looking to swing it over the weekend, right? Depending on kind of the newest headlines that is going on, or if like there's really nothing, no news or anything, I'll swing it like a normal day. But when you got some big kind of news coming out, like obviously with, you know, the tariffs and the Greenland and all that stuff, I'm being a little bit more cautious, swinging a lot more size over the weekend. But so yeah, that's just what I did on Friday. But ended up taking this trade, right? I'll come down to the entry here. So I added this NBIS 220 for the 120 calls, right? Stop loss low of day. So this was a better stop loss. I had an actual clear stop loss, not like XOM, right? XOM was a low of day, but I didn't really have, that was kind of a bigger stop loss. So that's why I added a full position here on NBIS, because my stop loss was so close to my entry. And I'll show you the actual entry. So obviously I'm entering it down here, but my take profits were always this range up here at 108, right? You can see that would be my first profits here. If I would have taken it here, I would have trimmed it on this rejection area here, which was that top of that little range here, which was that flag. You can see that was kind of the reason I took this in the first place. So the top of that trend here at around 108, right? First rejection spot that could happen if it got there again. That's why I take off there. And then I'm looking at taking off at around 115. Since there's previous price action, I can see if there's any resistance and stuff like that where I can take more profits off. And then 118, right? Those are my two take profits there. And I'll go through like intraday when I took it. So on Friday, took it on the reclaim, right? So this isn't a breakout. I was taking this in anticipation of the breakout, right? Which I'll go through that in a different video on why I took a normal size position on a stock that hasn't broke out yet. That's because a lot of the stocks have been basically going a red to green move, right? You can see the previous day it actually did the exact same move, right? It went red and then finished green, right? And then on Friday, red, finished green. But ended up taking this at around 9:22 a.m. So this candle here, as it reclaimed the 9 EMA on the daily chart and also the low of day from the previous day. And then took it there, and then look how close the stop loss was, right? So the stop loss was super close to the low of day. That's why I took a normal size position. That would have been no more than like a 10% loss. Couldn't have been, right? Especially with my 1 month out contracts, there would have been no way you can lose more than 10% on that. And then obviously I'm targeting up here at 108. So I'll just do that again, right? So put here, first take profits at 108. So that's a 2-to-1 risk reward ratio, which is good, right? Ended up taking profits at the high of day. So the high of days are typically, right, a area of a potential rejection, right? So that's why I took a few positions off there. I didn't take the half. I didn't take half because that wasn't my normal take profit. I trimmed small as it pushes to high of day, right? 25%. And then targeting 108 for trims, right? That was that first take profit. So trimmed half. My stop loss are still set. I didn't move that stop loss up to break even, since this wasn't a 20 to 20 or 25 to 30% move, or 20 to 30% move. But as soon as that pushed to that 108 spot, which was a 30% move, that's exactly when I put my stop losses up to break even, right? So now no longer this can be a trade I'm losing, right? So that way I'm basically protecting myself from ever losing in this trade. But I'm taking taking profits at half here, and I'm targeting 114 for the rest. Obviously, as long as it doesn't hit my stop loss, I should be in this trade. And then the next following day, this is when the scenarios happen, right? We have that huge gap down, ends up gapping down, since I do have my stop loss at break even. And when it goes over the weekend, right, obviously opened up below that stop loss, right, that break even spot. So then it wasn't going to fill you there, so you have to go and cancel it through your phone and then sell it whenever you want to, right? Typically for me, once it hit below my stop loss the next day, since it gapped down below it, I'm selling it as soon as the market opens, right? That's typically what I'm going to do. And then it basically came up a little bit. I lost 5% on that, right? So technically you can say I ended up trimming and I had one left over the weekend with a bunch of news. I didn't hold, half a position left. I ended up trimming more, and I wanted to only hold one position open overnight or over the weekend. So over the long weekend too. So I had an extra day in the weekend. You never know what's gonna happen. So ended up only holding one and stopping the last one off at 5% loss, right? You can even say that's close enough to a break even. So good enough, right? Ended up pushing back up throughout the day, in the morning or in the afternoon, and then it pushed up in the morning and then dumped the last couple hours of the trading hour or the trading day. So ended up being a perfect stop loss, because you could have said, oh, I should have stayed in it because it was pushing back up. But no, for me, it's no ifs, ands, or buts. I'm stopping out if it goes below my break even stop when I do move it up to break even. So that's what happened. That was how I managed my trade, my two trades actually, and then how I typically manage a lot of my trades. I'll try to go through it more on every single trade recap and show you exactly my thought process with that. But that's exactly how I feel like you should manage your risk, or something at least similar to that. That way you can stay in the game the longest. You keep your losses super, super small. I don't think I've had a loss over like 15% in a really long time. So that is why I'm staying in the game right now, right? I'm not bragging, because by no means am I perfect or am I a great trader, right? I think I'm a really good trader, but I'm not the best. So I'm not gonna sit here and say that. But I think this actually helps you if you just learn how to, kind of plan out your risk, plan out all that stuff when you're taking a trade. So that way you are never taking a trade blindly, and you already have, an idea of what's going to happen, whether it goes in profits or it goes against you, right? So stay tuned for another video. I will drop another one coming soon about something different with trading. But I hope y'all enjoyed this one. Hope you at least learned something. This is unedited, so there was no cutting out or anything, so I probably messed up a few times, maybe stuttered a few times. But hope you guys liked it. Like the actual video. Subscribe if you haven't subscribed, because I drop a lot of free sauce. So keep it coming, and I'll see y'all next time.